All right, ladies and gentlemen, I hope you had a wonderful day. Despite the weekend bullishness, we gapped down over 1% this morning, still closed red, and now we need to talk about the Russell 2000 and how the stock market is tricking you. So I got a lot of things to cover. We're going to go over the data tomorrow, what we got to deal with. I even made a play on the yen today, but let's start off with what's happened every Monday for the last 3 weeks. And after experiencing 19 green Mondays in a row, I don't know if you have noticed, but our Mondays haven't been that good. All right, we had one good Monday here, but the last time we had a Monday, it was pretty whack. You had the gap down, and then it came back up, but it still closed red. These Mondays have been starting us off very weird, and it's after we're chilling up at the highs, and everyone's like, okay, it's over. It's over. Even today, gold hit a high, and it's very important. I'm going to bring it up on the keys. It comes back down and does all this stuff, and right away, everyone's like, it's overdone. It's overdone. We were talking about the Fed futures and the bullishness. Some of that unwinded today, but in general, what is happening is what has happened every week. We are starting off slow, then running into data before moving. So fortunately, unfortunately, it's burning a lot of data. You're not going anywhere. And right as you hit a new high, you go right back to where you started. So we got a ton of things to talk about. I have all of the keys, and the Russell 2000 is an answer to all of it. So Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/The Stock Market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, before we get into any keys and what's happening tomorrow, what happened today, I want to clarify a little bit of yesterday. A lot of people on stream were asking after yesterday's video, the rally until Valentine's Day, they're saying, Josh, are you bullish? And my answer to that is that I am painfully neutral right now. I've been talking about that from the beginning of the year. I ended up taking some trades. It started to hurt me a little bit. It has been a wild back and forth, but thankfully, the long term has done a lot of work. Now, what do I mean by painfully neutral right now is that I am expecting either one of two things. It is a fork in the road coming into next year. We either watch the economy really slow down, that yield curve uninverts, and all of the timing of 12 to 18 months and 30 to 90 days after holding rates you cut, all of that stuff comes true, and then we have a lot of problems, or we find a way to avoid it, and this soft landing does materialize. So the way I'm looking at it, it kind of looks like a 50-50 toss-up, even if you want to lean more towards recession. What the last year has taught you, it's expensive to bet against that, especially if the data moves slow, the election and market moves fast. That's where I'm saying I am neutral. Do I believe the soft landing will happen? Not really, but at the same time, I'm not really trying to bet against it. And then, as always, I will have my long term. So why I'm bringing that up, because a lot of people were asking, what was the point of yesterday's video? It is to understand a lot of the key factors coming into December and even what people will be looking at to start off next year. And this idea of election stimulus, if we get good data, good dot plot, good CPI, all of that confirms, even with seasonality, we run into the end of the year. You're not going to hear Powell till about like end of January. This is where the whole Valentine's Day logic comes in, and hopefully by middle or end of first quarter next year, a lot of these answers should come true. Even with what Bill Ackman was saying just a couple of days ago, that is around March, just before Valentine's Day. So I want you aware of what is going on. The way I'm looking at it, I'm making some trades. I'm definitely making a lot less of trades, holding the long term and riding out, but also not fully deploying all of the capital in the long term as we're building it up and then getting prepared. So I think that's a very good place to start. But now let's talk about today, and let's talk about the Russell and what really happened. Like I said, to start it off, a lot of people are getting tricked. And why I'm saying that is because even though today was red, and at one point, I believe the NASAQ was down like 1.7, The Russell closed green by 1%. Since we have made that trade on Powell on the Russell, it is up over 3%. That is only in 48 hours here. So even though the market has hit a high, calm down, we wake up, you have this big gap down, everybody starts questioning the rally once again. This whole idea of the cyclical rotation, these cycle stocks coming back, that is being presented in the Russell. So I am going to be starting a little bit at the end here. I just didn't want to lose you, man. But what this is reminding me of is the Dow last year. I don't know if you guys remember, the Dow Jones was the first thing to rally. A lot of people don't realize this. I know because I got burned on the short. So this is what it was. Remember October and everything dying? The S&P hit that low October 13th. Well, the Dow Jones rocketed back up to near 2022 highs before everything else did. If you overlay it with the SPX and NASDAQ, you'll clearly see it. There was a little gap, and before we got into any rally this year, it was actually the Dow that led the way. So now this time around, it would be the Russell catching up to everybody else. So if you haven't watched the last couple of videos, we've been talking about this cyclical rotation for a while, but like I'm saying, I think the Russell is going to be the main event of this month, and it is probably going to be the outperformer, especially or only if the data comes in good. This is what I'm saying, bullish or bearish. If all of the data is supportive, there is no reason to get a bearish reaction. If that data supports, okay, cyclical rotation, inflation coming down, jobs market weakening, Powell doesn't have to go too crazy, we really confirm all of these front-run ideas, these are the plays that are going to take off. And like you noticed today, Magnificent Seven didn't do good. The rest of the other stocks, it's not like you had these broad-based rallies that we were experiencing over the last few weeks. It was the Russell and a lot of the small caps while everything else sold off. So keep that in mind. And now even coming into tomorrow, this is what I started it off with. You have 30 minutes after the bell. That's when the data is going to come out, and we should be getting data to hopefully start giving us some updates and let us or allow us to start being able to move from where we're at with this narrative and make some progress into the end of the week. Now, obviously, don't forget, non-farms will be the main event. So that is your first key, but to dive into that now, as far as what we will be dealing with tomorrow, the job openings, I'm going to start off by telling you this. It will cause a huge reaction to the upside if you get a print that shows 7 million. So the number last time or the lowest this year is 8.9, and if we get below that, that would be good. But I'm telling you now, if you see job openings drop to anything 7.9, 7.8, 7.99999, it doesn't matter. If you get a 7 handle, I do believe that will cause a massive rally. Now, how likely is that? I'm not too sure about it. Really, even 8.9 getting down there, I think that's even like 2 standard deviations, but last time we had that reaction, that is what caused the bonds to go crazy in the market. And with all of these questions swirling around, I think it will take a 7 million print to really hype up end of the year all-time high expectations. Otherwise, keep your eyes on it. And like I even said here, if we do get too low of a number, yeah, it'll cause a big reaction if it's 7 million, but shortly thereafter, people will start questioning whether or not a recession is right around the corner. So keep that in mind for tomorrow. Otherwise, the expected number that you will be looking for, I believe it is around 9.4 million. Last time it was 9.5. You could see here on Trading Economics, and this is what I'm talking about. Remember, the downside of the JOLTS jobs openings, it really helped the market. The little easing and holding up here, we didn't like it, but if you notice something over the last couple of months, it's kind of holding a floor. We react positively to below, so realistically, anything around that 9 million, it will be a good reaction. Anything that shows 7, it's going to be a whole new regime, and that's where people are going to start saying, yep, the labor market is shifted, but that doesn't have to materialize tomorrow, so I'm just telling you to keep your eyes out for it. But that will be the main event as far as data is concerned for tomorrow, but also you will be getting the ISM services, and these are big movers. So we talked about it. ISM services, manufacturing, it has moved the bonds lately, and services is one of those sticky parts of inflation like we were talking about with the PCE last week. This one is going to be very key. There's a prices paid metric. There's all of that good stuff. But one thing I want to add in here is that there is S&P services 15 minutes before the data, that won't be the big data. The ISM, that is the one that holds more weight and importance. So thought I would give that to you now, but this is what we're dealing with tomorrow. It's going to start off the week with data, and hopefully by the end of it, we are able to get some action. But that is key number 2. And finally, to close it out here, I think this relates to a lot of things of today, and I hope this hits you. You got to break out the notes. Break out the notes. I'm hyping up the key number 3, Chad. It's really important. Are you ready? The non-farms and the CPI are cool, but gold and Bitcoin, they are affecting the dollar right now. So yes, we're waiting for the non-farms. Tomorrow, that jobs data, it's going to move things, and all of the data should realistically move the dollar. But one thing you got to notice, gold hits an all-time high, then has one of its biggest intraday drops out of nowhere, just after hitting that level, and then all of a sudden it was like, oh, we're cooling off. People are saying, is gold front-running a recession? Is it showing that the fear issues, rates, all these things? But just think about it. Gold shoots up, all-time high. Strong gold should mean lower dollar. Then gold plummets, that should raise the dollar. Bitcoin shoots up 7%, hits a new high. We've been talking about how Bitcoin has led the NASAQ all year. All of these factors are impacting the dollar. So why I'm telling you this, because for this week, even next week, we will be focusing a lot on the data, but don't forget, what is the data doing to the dollar? You are going to find some answers there, and that is what's going to make a lot of the moves, even down to the yen, a little bit more trickier to spot. So that's where I'm going to wrap it up for the keys. If I could finalize it with anything, like we said for today, we had a very interesting movement in terms of both downside and then coming back up, but just don't get tricked. There was a lot of things moving. Even the composition of the NASDAQ today, it was 50-50. S&P, 250 names green, 250 names red. Just we're dealing this okay. We're holding up. We're not going crazy. It's still euphoric because of how we got here. That's what really has everybody, kind of tripping out. Remember, this was nonstop, but really the last couple weeks we've been calming down, and that is what is putting us in this mode. So don't get too jumpy. Remember what we need to watch, and hopefully you use the bigger data sets, and if the wind changes, you use that to change any ideas. Otherwise, I hope you get a little bit patient here and ride it out, because it's about to get really exciting. But Chad, that's all I have for you in terms of the keys. But now, let us get into the plays. So, right off the bat, you might hate me for this. I'm really about to do, bro. I'm annoying. I know, I'm going to do it, man. IWM, bro. That's the first play. M2K. We're still holding that play. I remember I flipped the RTYs. This M2K, even off these 3 minis, they did good, but I cannot stress how important this is. Literally, I am up on that trade from that bottom tick 3% since Powell. And why I'm saying this is because, yeah, it may have pullbacks. I do think this will be the big play. If the pullbacks are a result of people responding to the data, watch for the Russell to brush things off easier, but this most likely will be the outperformance this year and even into next year. If the data does confirm the best case scenario, this is the one that you want because it is still lagging. Dow Jones is still near highs. NASDAQ still near highs. The Russell, that is the only one that is still lagging behind, and you could see it. If you ever pulled up the Russell, you will clearly see it is borderline still in the gutter. We pull out a multi-year chart. They're barely above where they were getting at in 2020. Not too many assets could say that right now. So there's a lot of factors, and the Russell is compiled with a bunch of things, but this is what I'm saying on these days here. Just be mindful when there's a lot of stuff moving. Yeah, it may look like a big down day because 4 or 5 of the biggest names in the world all wanted to go down 3%, but you are definitely watching some rotation action, and whatever happens with Powell, the rates and policy, this is the flashing golden ticket of the Russell and those cyclicals being the answer. So watch out for that. I'm still riding that play. I'll give you an update, be on stream, or maybe get the stream alerts if I'm going to close it out, but I do think I'm going to hold this out for a little bit of December, or at least we'll respond to the data to say, all right, maybe it's time to get out, or maybe we double down. But that is play number 1. Watch out for that. Then play number 2. Oh, this one is like painful, and it's bittersweet. EYPT, and no, I did not misspell my home. Okay, it's not supposed to say Egypt. It's EYPT. It is a wet AMD drug, and if you're not familiar, it's like a multiple sclerosis drug. We've talked about it, or muscular dystrophy, excuse me. We talked about this one a lot, and I made a huge play on Outlook, and then I got clapped, and then it came back, and then it got clapped, and then we're still in it, and then they have another FDA trial at the end of next year, but we were saying this. We were like, yo, if one of these drugs gets approved, this is a huge deal, and sure enough, Egypt, EYPT, they went from $6 as high as like $22. I think they were even more pre-market. It was absolutely insane, but this is where it starts to get bittersweet. Obviously, I'm mad I didn't get that one as far as my wet AMD drug, but the fact that the other wet AMD candidates did not totally get clapped, Outlook, I'm talking about you, I'm seeing that as positive for the industry, and one thing I'll add to it, the biotechs are also a cyclical stock, believe it or not. Not every single one of them, but in general, if the cycle is favorable, interest rates, it gets people spending and doing stuff, well, investing in biotechs, that is a cyclical behavior, believe it or not. So I am going to be watching this, all the other wet AMD drugs. Like I said, the fact that somebody got the approval and not everybody died, this should leave you a little bit curious and keep your eye out on the space. And like we were talking about with Pfizer and all of the buyouts, the Abivi stuff last week, today Roche bought somebody that was related to the weight loss GLP stuff. You may start getting some of this activity at the end of the year. Remember, we had a biotech Proverbs last year. They got bought out. Sanofi, end of the year, drug approvals, all of that could be a good thing to keep your eyes out for. So that is play number 2. Then finally, play number 3, baby. The yen. And this one looks a little different. It is /6JM24. I know, it sounds pretty wild. I don't even know. It sounds like a barcode, whatever. Elon, his child, I don't know what it is. But it's 6J. It's the yen. The M24 means it's going for June of 2024. I don't know why it says May, maybe May, June. That's where the M comes from, but why I decided to go with it, I grabbed 2 of the future contracts, and I'm already holding one of the front month 6J contracts. I've been holding it for the last like 30 to 60 days, I believe. A little bit down. It actually came back a lot recently, but why I decided to go for the 6J M24 today, I am preparing for the rollover, but I wanted to get a little bit more of time because I noticed the price wasn't that bad. Usually if you go further out on the futures contract, the price raises. You're kind of paying that future premium of the price, but the way I was looking at it, it was a price that was literally just there a couple weeks ago. It secures me 194 days, and I want to get ahead of the rollover, and if there is any big action, if those futures already have a premium on 194 days out, if anything material happens, those will catch a nice bid and a nice floor. So I decided to go through it. I have 14 days left on the other contract, and one thing I'll tell you, a lot of other futures may be expiring here in 14 days, so we might get some action. I want to get ahead of it. Thought I'd be grabbing it. I'm still in the YCL, and somebody asked me about that. What do I want to do with it? I want to move that play to the futures, but how I'm going to do it, I'm going to be watching the data this week. Again, I do think you should be watching it all week. There's Tokyo CPI and a lot of other data. It could move some things. They're talking even tax rates and all of that. But the way I'm looking at it, if the data is favorable, I want to try to get one big average down on the YCL, get a flip because of the leverage that it possesses, and then take whatever is from there and then move it to a future with time, because as we get into this next year, policy does change. The yen is going to be big, and I want to make sure we're positioned, and that's the play that I like above anything else. Again, it's different than buying TLT and holding long or anything like that. You can still lose money, but the duration risk on a currency is a lot different than that of a bond. So maybe that's something. We've talked about it a lot, but keep that in mind. But as far as everything else, I did no other plays today. I'm still holding that M2K like we said. It's a nice gain, 3%. I was going to make a couple of plays. We tried to snake the chain. What name was it? I think it was FIVN. They had like a buyout news thing today, or talks of like reviving the deal. They had an opportunity. And then there was one more that I tried to go through on the option chain, but overall didn't really force anything. It was kind of a slow day, kind of a boring one, but by tomorrow morning, I'm sure we're going to have opportunities for bond plays, the yen, the Russell, and everything else in between. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, the heart of the child. Oh, that will kill or instill a lot of belief, especially as you start getting older, my friend. What is possible? Can you do it? Oh, it's set up against me. I'm just telling you how you view things, and be careful of the false heart of a child. Oh, man, Chad, don't get me started. Now, you have to be there for Philo, but Chattadonia, I hope you're ready. Let's get some good action tomorrow. I'll see you in the morning. Drink that water. Stay hydrated, healthy, all that good stuff. But it's game time, and horn.